campus. For those of us joining virtually, good morning, good afternoon, good evening. We will begin the press conference for Wipro's first quarter earnings for the fiscal year 2025. My name is Nisha Chandrasekharan, and I'm part of the external communications team, and I will be your moderator for today. Joining me on stage is our executive leadership team, our Chief Financial Officer, Aparna Iyer, our Chief Executive Officer and Managing Director, Srini Palya, and our Chief Human Resources Officer, Saurabh Govil. We will begin with opening remarks from our CEO, followed by the financial review from our CFO. Post that, we'll open the floor for your questions. With that, I would like to hand over to our CEO and Managing Director, Srini Palya.
Thank you, Nisha. Hello, everyone. Thank you for joining me and my leadership team for our first quarter results for the financial year 2024-25. Over these past 90 days, I have traveled across our markets, meeting clients, employees, and of course, engaging with partners and stakeholders. With each conversation, my appreciation of our business has deepened, and my confidence in our team has grown stronger. It's truly inspiring to witness the trust of our clients placed in Wipro. Additionally, I've been able to hone the focus of our 5 strategic priorities that I shared with you last quarter. I'll be providing with you an update on this shortly, but let me first start with the financial highlights of the quarter. In quarter one, we did not see a significant shift in the demand environment. Clients remained cautious and discretionary spending continued to be muted. Our IT services revenue for quarter one was 2.63 billion, reflecting a sequential decrease of 1% in constant currency, which was within our guided range for the quarter. Operating margin was 16.5%, an increase of 0.1% over the last quarter. Let me now provide you with some color on how our SMUs and industries performed in quarter one. I'll begin with Americas 1, which delivered a sequential growth of 0.4% in quarter one. You may recall that Americas 1 had a good year in financial year 24, with the health and technology sectors leading the way. We now see momentum in consumer and communications sectors also in this SMU. Americas 2 had a sequential decline of 0.7%, but BFSI, banking, financial services, and insurance performed well, achieving a sequential growth of 1.4% in quarter one. In fact, with a year-on-year growth of 12.1% in quarter one bookings in Americas 2, we are optimistic about returning to growth in this market in the medium term. In Q1, we also maintained positive momentum in our Capco business, achieving a sequential growth of 3.4%. However, Europe and APMEA remained soft for us, with sequential declines of 1.4% and 4.2% respectively. Our pipeline in Europe remains healthy, and our primary focus there will be on improving conversion. We are also reviewing our strategy for APMEA and will keep you informed of our progress in the coming quarters. Let me now talk about the industry sectors. We had a varied performance. Banking and financial services retained its positive momentum from last quarter, and we have now seen growth in this sector for 2 consecutive quarters. This sector grew 0.5% sequentially in quarter one. Driven by deal flow, the consumer business grew by 1.6%, this quarter. However, manufacturing, energy and utility sectors continue to show weakness for us, experiencing a sequential decline of 3% and 6.3% respectively. Moving to order booking, our overall booking TCV for the quarter was 3.3 billion, with large deal TCV of 1.2 billion. Now, let me update you on the progress we have made on the 5 strategic priorities that I outlined last quarter. If you recall, hopefully you'll recall, we discussed prioritizing large deals as a clear area of focus. We are driving large deal creation systematically across our client base. We are shaping these opportunities proactively, engaging with influencers and partners. As a result, our pipeline for large deals remains robust. Once again, we had a quarter where our large deal bookings exceeded $1 billion. Our success in securing 10 large deals in quarter one was the key factor that made this possible. Let me call out 2 of the deals that we signed in quarter one. The first is with a US-based communication service provider, where we were chosen for a 5-year contract to provide managed services for select products and building industry-specific solutions. I know many of you have written this in the newspapers already. The second win is in the automotive segment in manufacturing. A US-based OEM has selected us to streamline their global infrastructure services. We will actually develop a solution leveraging both automation and AI to improve user experience and reduce operating costs. Our next area of focus that I had called out is to strengthen our relationships with our major clients and strategic partners. We are investing in our established strategic accounts and also in high potential accounts. Our focus will be on those clients within our priority sectors and markets we have called out. In fact, we'll further strengthen our capabilities in consulting, delivery, and solutioning in these accounts. We are also actively collaborating with hyperscalers and our strategic partners to co-innovate and develop unique propositions for our clients that we have called out. I would also like to emphasize that even in an otherwise soft demand environment, our revenue from top 10 accounts have grown 1.3% sequentially and 3.8% year-on-year in constant currency terms. The third key priority I had previously highlighted is to develop AI-powered industry and cross-industry solutions using a consulting-led approach. Here, our goal is to help clients transform their business and operating models using the power of AI. We are also actively strengthening and accelerating our industry consulting capabilities to support this. We will continue to build cross-industry solutions that will deliver value to clients across our horizontal play. Let me give you 2 examples of our recent wins in quarter one. One, in the healthcare sector, we have been selected by a leading US-based health solutions company to help them comply with CMS guidelines. Our consulting-led AI-powered industry solution will seamlessly integrate CMS provisions into billing and various other processes for the client. This will simplify prescription cost management for all their members. And the second example, we are collaborating with a leading financial services company in North America to develop a Gen AI-powered assistant for wealth management to help portfolio advisors. On a lighter note, wealthy people are getting wealthy, so this solution will really help them. Let me now shift our next area of focus, which is building talent at scale. Our goal at Wipro is to attract, nurture, and grow a diverse talent pool. We have ramped up our upskilling efforts across various practices, covering both emerging and core technology areas. In fact, in quarter one, we rolled out I Aspire, an AI-powered career development platform. This platform, I Aspire, offers personalized learning pathways and aids in the career progression for each and every of our employees. We have already provided foundational training to over 225,000 of our employees, and an additional 30,000 employees have received advanced AI training. With Wipro as client zero, we are utilizing our in-house AI expertise to develop GenAI solutions across all units and functions within Wipro. We believe this will help us boost not only the capabilities of our employees, but also make Wipro GenAI ready. And finally, we are driving execution rigor with speed, helping client centricity and delivery excellence. In this context, we are focused on nurturing innovation in our delivery capabilities by investing in our Lab45 platform and the Wipro Enterprise GenAI Studio. We are also incorporating various GenAI tools throughout our software development lifecycle to enhance both the productivity and quality of our delivery. In closing, I would like to say this. The initial climb is both challenging and exciting. And as a hiker, I'm pleased with the momentum we have built in quarter one. Across the company, I have noticed fresh energy and renewed dedication towards achieving our goals. And with the commitment and passion of our 230,000 plus employees across the world, I firmly believe we will seize market opportunities ahead of us and will continue to progress steadily, one step at a time. Now, on to the guidance. As we move into quarter two, we believe that we are now in a better position compared to the start of quarter one. For quarter two, we are guiding for a sequential revenue growth of minus 1.0% to plus 1.0% in constant currency. We are confident that we can sustain our margins within a narrow band with an upward bias in the coming quarters. With that, let me turn it to Aparna for a detailed overview of our financials. Thank you.
Good evening, ladies and gentlemen. Let me now quickly summarize the financial highlights for the first quarter of this fiscal so that we can then take questions. Our IT services revenues declined 1.2% sequentially in reported currency terms, which is a decline of 1% in constant currency terms, and it's well within our guidance range. We are pleased to share an expansion in our IT services margins of 0.4% year on year and 0.1% quarter on quarter. We have delivered 16.5% operating margins on the back of a tough revenue environment and even after continuously investing in our talent. Improved utilization, fixed price productivity, and optimization of overheads have been the key levers at play. We expect to gain from the tailwinds of our operational rigor and are confident of being able to operate in a narrow band with an upward bias. We generated yet another quarter of strong cash flows. Our cash flows of $479 million in Q1 is at 132% of our net income. With this, our current investments and cash balance now stands at $5.4 billion. Our other income, net of finance expenses, grew by 21% sequentially and year on year. Our accounting yield for the average investments held in India was at 7.6% for the quarter. Our net income at INR 30 billion grew 6% sequentially, and our EPS for the quarter at 5.75 rupees grew 10% year on year. In terms of other key metrics, our ETR is at 24.5% for Q1 25 against 24% in Q1 24. Our hedges continues to be in line with our policy. We had about $3 billion of forex derivative contracts as hedges at the end of Q1. Finally, I'd like to reiterate the outlook shared by Srini for quarter 2 25. We expect revenues from our IT services business segment to be in the range of 2.6 billion to about 2.652 billion dollars. This translates to a sequential guidance of negative 1% to a positive 1% in constant currency terms. With that, I'll now turn it over to Nisha for Q&A. Thank you.
Thank you, Aparna. We'll start with the Q&A. Please raise your hand and we will head the mic towards you so you can ask your questions. Just wait for the mic so that the audience virtually can listen as well. And please introduce yourself before you ask your question. Ritu, would you like to get started?
Sure. Hi, this is Ritu Singh from CNBC TV 18. Just to get started, even given your guidance at -1 to 1%, let's say you're at the lower end, that'll be 7 consecutive quarters of negative revenue growth. Just give us a sense of when you see this turnaround, while you say that as you start the second quarter, things are starting to look better. What are the specific areas of green shoot, if you could point out? BFSI, you said, for the last 2 quarters has been seeing some improvement, but there's still stress you've highlighted in most other industries. So just a sense on what you're getting from your clients in terms of a turnaround when it comes to discretionary spend, and when you see a meaningful recovery back in the black for Wipro.
So, Ritu, as you know, when we guide based on the current visibility that we have. So, like Srini shared, we're starting Q2 certainly with an improved confidence as compared to how we started Q1, and we're hoping to deliver, a better in-quarter execution. Like you said, there are some puts and takes in the guidance. There are places where we are seeing positive momentum. Americas as a geography, both Americas 1 and Americas 2, we are seeing renewed momentum. Capco will be a third quarter where we are continuing to see the momentum build quite nicely. In fact, even their bookings in Q1 grew year on year. And the outlook for Q2 continues to be good. So we are seeing parts of our business which is certainly recovering. Europe and APMEA are soft. And as a result, both the hits and misses are covered as a part of our guidance.
Thanks, Aparna. Ritu, let me add some more color to this. The way I see it is the deal pipeline that we have that I talked about, it's very robust, which includes large deals. And the deals in the pipeline is a lot more secular, if you ask me, across the 4 markets, across the 7 industries that we operate in. And some of these deals are very interesting because these are around the industry solutions that I talked about, which can be replicated across these industries and these markets. And that gives a little bit of good news for us in terms of how we can move forward. But having said that, I think the guidance for the quarter is -1 to +1%. I also made a statement that at the beginning of quarter 2 versus the beginning of quarter 1, I think we have a better view of where we are heading.
Can we have the next question from Veena?
Yeah, hi. Veena from the Times of India. I have few questions here. First, on the headcount, there's been a slight increase in the headcount. So is this trajectory going to continue? Also, given that there is a lot of focus in generative AI, how fast are L1 roles really being eliminated? We've been hearing this for a very long time, like for instance, testing or just looking at tickets. Have we hit the last nail in the coffin where such roles are getting eliminated? Secondly, on the variable pay, what sort of a variable pay will your employees be getting on an average? On the Microsoft outage today on CrowdStrike, has that had an impact on work and any advisory that you've issued to your employees? And Infosys and TCS, your peers, have announced campus hirings. TCS 40,000 and Infosys about 15 to 20,000. What is it going to be like at Wipro? If you could give us some numbers. And also with the previous year's backlog of fresher onboarding, what is the status? If you could give us some light on that. And lastly, on the macroeconomic environment, can you, is the visibility only up to Q2 or further as well? Yeah.
Lot of questions. We have to keep a track of them. So some I will answer, some Srini will answer, some Aparna will answer. So, I'll just divide. I've written on everything. I'll speak on the variable pay headcount. Okay. Good. So I'll answer some, and then some Aparna and Srini can answer. So let me start by giving headcount. So we are seeing a marginal improvement in the headcount. We have started after a break of a year onboarding freshers from campus. We onboarded about 3,000 odd people in this quarter. We would be onboarding around 10 to 12,000 people this fiscal. We would be completing all our backlog of offers made in this fiscal. A commitment to to people whom we had made offers, so that will get done. Not only that, we will also have done our relationships and partnership with certain institutes. So we will go to these institutes and off campus for hiring for next year. Another similar number we're looking for next year. So very clearly we are building muscle so that we are there ready as growth comes back. You would have seen our utilization at going up every quarter. It's reached a peak, and we believe it's the right time for us to look at the supply side so that we're in a much better position. On variable pay, so that gives you a thing on headcount and campus hiring. On variable pay follows the business performance. Being the first quarter of the year, obviously our payouts will be better than what we had given last quarter. So it'll be in line with the business performance on variable pay. These were the three things from my side.
Okay, maybe I'll cover the macro environment and Gen AI. Hi, Veena, how are you? So the macro environment, in the context of geopolitics, in the context of the elections that are going on, and I know you're the journalist, you must be reading all the news that's going on. I think it's difficult to predict. There has been a hope that second half will be better than the first half in terms of the macroeconomic conditions, and I'm hoping that will continue that way. But it also varies a little bit more by country to country that we operate in, and also the industry within those countries, right? So for example, if you look at our BFSI segment, and if you look at specifically Capco, let me say, we have seen growth coming in both from Europe and the US. So it's becoming a lot more secular. We are also actually focusing on a country like India and Asia Pacific. So that gives you a view of banking and financial services. If you look at manufacturing, especially in the context of automotive, again, that's something that we are seeing a little bit more traction. And especially if you look at both the US and Europe, we see a good traction. And one of the deals that I talked to you about is one of the large automotive OEM. And the third one was on the consumer business, right? If you look at retail, consumer, CPG companies, travel, transportation companies, right? They're also kind of started investing because they need to invest to improve their whole, customer journey, right? In that context, there are, investments that's going on. So to me, while it's unpredictable, hopefully it will settle down second half, but I'm not an analyst to predict, right? That's number one. The second question was in Gen AI, will the L1 roles go? And I've been hearing this, what's going on, right? So the way we see Gen AI, right? We are, let's put it to three parts, okay? We are leveraging Gen AI. We are powering our industry solutions, both cross-industry and industry solutions with Gen AI. To me, that's a very dominant way of going into the market from a Gen AI perspective. The whole network management that we talked about, the whole pairs solutions that we built for the CMI thing that I talked about, right? These are all Gen AI powered. So the point is Gen AI helping you get better? The answer is definitely yes. Is it making your solution much more smarter? The answer is yes. The second part is the managed services that we do, right? The infrastructure piece, the business operation piece. What we are doing is we are infusing Gen AI there, right? Whether it's to do with some kind of a contact center, let's say, or a back office operations. And Gen AI is actually evolving on an everyday basis. And it's a very exciting time for us, as we do that. The third part is how do you leverage Gen AI in the context of software development lifecycle, right? Gen AI is predicted to bring in a lot more productivity, both on the coding side and also testing side. And that's something that we are talking to the clients, we are working with the clients, and it's a journey. All I can say is that in the medium to long term, the Gen AI really will take off. The cloud story, right? It was like a hockey stick. I would say Gen AI will accelerate the whole process. Now, whether will it be a hockey stick, I can't predict, right? So that is when you will see a significant view on how this whole thing of L1 and other things that you're doing it. But to me, Gen AI is going to be a very strategic for Wipro.
You had a question on CrowdStrike. We can confirm to you that there is no impact. Oh yeah, you want to?
Oh, okay. Sorry, I missed that question. You asked so many questions, Veena. On CrowdStrike, number one, no impact to Wipro. Number two, we are actually talking to the clients, trying to step up and help them because we are following the Sun model, Europe and US, right? And we are seeing the impact of CrowdStrike. So all I can say is that we are ramping up ourselves to help our clients. We are going by client who use the CrowdStrike for them. I think that's the state we are in, and we are prepared to help our clients.
Can we have the next question from Sanjana, please?
Hi. Yeah, thank you. Hello everybody. I'm Sanjana from the Hindu Business Line. So I think there has been some continued softness in key verticals like E&U, manufacturing and communications. So when will you see green shoots in this business? And also, Aparna, you mentioned that Capco has gained some momentum. So some analysts have pointed out that Capco will benefit from discretionary spending by BFSI clients. Do you think that's true? And a few years ago, the former CEO mentioned that cutting down on clients will help concentrate on profitable deals. So I think compared to the last quarter, you have let go of around 7 customers. So is that still the strategy that you are following? Thank you.
Okay, I'm going to start and maybe Srini can add. So on E&U and manufacturing, like Srini said, we are experiencing some continued softness. This is largely because of some of the large programs that have ended and we have not won enough. And as a result, the growth rates are, soft. If you look at our wins in manufacturing, we've had a couple of good wins. We have a good pipeline. We need to convert it. And on communications, you would have noted that we announced a large deal. So that's one step in that direction. I think we have a good pipeline. We will need to convert. On Capco, yes, we are seeing better momentum. And that's secular, not just in BFSI. They also have a good presence in energy. And the growth and the bounce back in Capco is fairly secular, both across the geographies they operate in, the service lines they operate in, and the sectors they operate in, right? In terms of the client attrition, you're noticing some volatility. It's a result of, the decline we've had in our revenues. I wouldn't be too concerned. Srini stressed upon it. Our top 10 clients are growing faster than the company. In fact, they grew sequentially 1.3%. If you look at our top 25, which we don't share in the data sheet, but I can share with you, the 38% of our revenues come from top 25 clients, and they've grown 1% sequentially as well. So look at our performance in our top clients, and that should give you some comfort.
Uma, please go ahead.
Sanjana, I think she was very precise. I don't have much to add.
Yeah. Good evening. I'm Uma Kannan from the New Indian Express. You spoke about 5 key strategic areas. Like you also mentioned in your presentation. So, can you give us some clarity on how are you building on these priorities, especially large deals first? And second, also looking at your past, can we expect some acquisition that can happen this fiscal? Like you were also mentioning about automotive, like can we expect some acquisition this fiscal? Thanks.
Thanks, Uma. Let me first talk about the M&A. M&A is our strategic. We look at what are the white spaces that we have, both on the technology side and the industry side, and it's something that we'll constantly look out, and we will do the right M&A at the right time. So that's part of the strategy, and we will continue to do that. And we have a very solid M&A team, and as an organization, we have been acquisitive, and we will continue to do that. But you have to have the right asset at the right time for the right white space that you have. That's on M&A. On the 5 strategic priorities, okay, I'll go from the bottom up, okay, if you can recollect all the 5 strategic priorities. One is bringing in execution rigor with speed on the client centricity aspect of it, right? How do you up our delivery excellence, right? How do we up our delivery innovation? So we got to invest. So on the delivery innovation, we are investing in the platform, which is Lab45 and our studio. The studio has a bunch of accelerators, it's got tools, right? And it's one place where any 230,000 employees can go and plug in and play the Gen AI aspect of it. That's where we'll continue to. On the delivery excellence, we got to deliver to our clients what we promise and more. That's my expectation. Now, then the next one was build talent at scale. And Saurabh talked about the next gen associates going to the campus, bringing them, training them, right, grooming them, giving them opportunity. That's one. Second, for ourselves, upskilling across technologies which are both emerging and which are core, right? You can't miss the core as well. So if you look at the industry and cross-industry solutions that we are, winning from the market, we need these people to understand a business context of our client, not just the technology aspects of it. So with iAspire, I know you should see the demo. It's really fascinating, okay? So I think the employees can actually come and say what their aspiration is, how they want to build their careers. And for example, Uma, if you want to be a chief operating officer, iAspire will tell you how you can actually progress and how you got to train yourself and you got experience. So that's where we want to build in talent skill, and the talent is going to be diverse and it's going to be global, right? Then coming to the point on large accounts, right? Aparna talked about how our top 10 accounts, how our top 25 accounts are grown. My aspiration is how our top 100 is growing across the spectrum. And what we need to do is we got to invest. We got to understand the client. We need people who understand the customer business, understand the technology, how do you articulate, how do you solution, right? And it's a journey. The way I see it, it's a journey. And the last one, or the first question, you started with the large deals, right? Large deals, the networking deal, let me talk about that, right? The telecom networking deal, it wasn't easy. First and foremost, you need to understand what the client's business problem was, right? And then articulate how you can actually solution it based upon our industry solution that we have already built, which is powered by AI, right? So when you show the context and how you can give the business benefits, I think it's a lot more domain and consulting led. I think that becomes a go-to strategy. My expectations from my teams is that how can you replicate that across, right? I'm just giving one example. The healthcare. Today, healthcare is going through tremendous change. Let's say United States of America. There's Medicare, there's Medicaid, and there is ACA care. How can you bring all elements of this at a client and impact their business, impact the experiences of their members on this platform, thereby helping the client as well as their members, right? So that's how the thinking has to be. And if you articulate that value proposition to the client, I think we can have a better conversion. That's my aspiration.
Can we have the next question from Sai, and then Padmini will come to you right after.
Hi everyone. You just gave some passing mention on the customer bit. But I just wanted to know why the 75 million bracket has fallen by 3 and 50 million is fallen by 2. Even if we think about a rejig, I don't think there is, any fall to the brackets that are lower, 20 million or 10 million. So can you tell us why that's happening? Probably deals have been closed. And another thing I just wanted to know, this -1 to +1, range, how much of it is specific to, Wipro, and how much of it is specific to the macros around? Because like since last week we're hearing, there have been green shoots. BFSI in the US has been improving. So can you tell us some indication on when you see, Wipro specific issues ending and turnaround in place? Thanks.
Sorry, I didn't get your name.
Sai from Reuters. Sai Ishwar.
Hi, Sai. Let me, Aparna, can I answer these questions? Okay. So, number one, Sai, the way I see it is that I look at the top 100 accounts of Wipro. There will be some ups and downs on that. I can, maybe Aparna can give a color to that. But having said that, what is important is execute our strategy in each of these accounts. The point you made, how do you shape demand within those clients? How do you work with partners, bringing the right value proposition you want to do? I think that's I'm focusing on. Onesies and twosies, I'm not too worried. Sometimes, the customer may reduce the spend depending upon how their business is performing and so on and so forth. So that's not a big concern item for me. What I'm focused on, the set of accounts that we want to really go after and become dominant and become a true partner for them. That's number one. Coming to the range on -1 to +1%, right? There are factors in the market, but there are also our internal factors. Like Aparna talked about, if you look at specifically on energy and utilities and manufacturing, right? We have had a soft quarter, and we do have, we'll have to recover that softness that we had through winning deals and growing the accounts. Now, if I have to look at the broader brush, right? I think we talked about it. Americas 1, right? It continues to grow, which is good news. Within Americas 1, I've given you a color of healthcare and communications also coming back. Consumer is also coming back, right? So that's good news. Americas 2 and quarter 1, you've seen a little bit of a decline. And however, I said BFSI, banking and financial services, which is very dominant within Americas 2, and the deal wins that we got, which is almost 12% sequential growth that we got. That gives me the optimism on Americas 2 in the midterm in terms of the growth. Now, Capco, I did tell you that it happened. It's growing both in Europe and also in the US. So 3 of those are, I see the positive momentum. Now, coming to APMEA, I did tell you that we've got a new leader and we've got to come back and share the strategy how we want to do that. Second is on Europe. We do have a good deal pipeline. We need to convert that to bring back the growth in these 2 geographies. That's how I would paint it. And that's how the quarter 1 is -1 to +1%.
Padmini, you can go ahead. I'm sorry.
Hi, I'm Padmini from Financial Express. So how many of your Gen AI POCs are into production right now? Are you seeing any $1 million deals in that space? Is it short term or long term? And we saw 2 of your senior executives changes in the quarter. Is it part of your strategy, and should we expect more, especially over the weekends?
So Padmini, let me take the second question first. I did stand in front of you last quarter. I said we are going to have 5 strategic priorities, right? I came back and did talk about the 5 strategic priorities. I also said that I'm going to get better at the strategic priorities after my meetings with the clients and the employees and the stakeholders, including partners and influencers. So we will continue to stay focused on 5 strategic priorities going forward. That's number 1. Number 2, I did tell last quarter that we are not making any structural changes. We're going to have 4 SMUs and 4 GBLs, and that continues. There's no change. I did mention that people and leadership will continue to evolve. I can assure you it will continue to evolve. In fact, we have also launched Wipro Leadership Institute, where we want to groom people across the bands who actually say to I aspire that I aspire, right? And build a career growth. And that's going to be evolving, that's going to be changing. So that's my response to the second question, second point. Coming back to, you want to add something?
I just want to add that there's a deep bench strength of leadership. So all exits which have happened, you have seen, we have people who are internal talent which have taken over those positions. So that's the strength of the organization. And there is no reason for us to be any worried about any such changes happening.
So Padmini, on Gen AI, I think I may repeat what I said in the past. So see, there are multiple aspects of Gen AI. There are, I don't want to give the number of proof of concepts, number of use cases that we have at this point in time, because this is ongoing. Gen AI is something that we will continue to involve across process areas. Some of them may work, some of them may work. That's why the clients are doing a lot more proof of concepts. Please understand, when you are implementing Gen AI, it has to be responsible, it has to be secure. That's very critical for the organizations. As you continue to innovate or service delivery in the context of Gen AI, try to infuse Gen AI into managed services, impact business process through Gen AI, and also bring in upside to new business for our clients. It will be a journey. Like I said, midterm to long term, it will dramatically accelerate. But for now, clients are building that, and some POCs may go into production, some may not go into production, and that's, I think, a journey for us and for our clients across industries.
Haripriya, you can go next.
Hi. Sir, you mentioned about the prominent deals that were won in this quarter, but...
Haripriya, can
you be a bit louder?
Yeah.
Am I audible now, sir? Sir, you mentioned about the large deals that were, prominent deals that were won in this quarter, but when we look at YOY numbers for both total bookings and large deal TCV, we see a dip there. So how should we read into this one?
Yeah.
And just expanding on that AI thing that you were talking about, some of your peers have decided to call out the revenues that they're getting from the AI deals, while one more peer has said that because it's baked into everything, we can't call out a specific number. So how are you looking at it? Also, you must be aware of the recent Karnataka's proposal to have local job reservation. Although that's on hold now, as a prominent company in Karnataka, how are you looking at this, and what's your opinion on that?
Haripriya, again, you asked me 3 questions. Okay, let me come to the large deals first. I think we came across from a quarter 4, we had 18 deals to quarter 1, which is 10 deals. There are certain deals we could have closed in quarter 1, which have switched to quarter 2, but I know I'm not really worried about that. Like I said, large deal pipeline is robust. Focus is to do conversion, period. Coming to Gen AI, I think there are 2 sides to that coin, right? You give both the answers. You are asking me to pick one or the other. I'll pick the second answer. On the Karnataka...
I think the Karnataka thing, it's be appropriate for us to give a comment once we are clear on what's the bill is, because I think the government itself has taken it and deliberating it. So once it comes out, we will be in a position to comment on that.
Anika, you can go next.
So I spoke about hiring from the campuses. 3 or 4 things I want to call out here. You have to see hiring in context of 3 or 4 parameters. You have to see in context of our utilization, which is an all-time high. You have to see in the context of attrition, which has been stable with an upward bias. You have to see in the context of demand, which is coming up. And if I put all these 3 things together, we are hiring freshers from campuses this year and a plan to go next year. That's at scale. And we continue to hire specific skill sets across the globe based on demand regularly. So that's what I would put. I've given you some brief idea of numbers for the freshers. Rest will be demand driven as we see more demand coming up.
So you can go ahead, yeah.
Hi, I'm Narayankar from UNI.
So you'll have to
when-
speak a little bit
Narayan, you have
louder.
to speak louder, please.
Am I audible now? Yeah. When I look at your I'm Mr. Narayankar from United News of India. When I look at profit growth year on year, you're doing fairly very well. But when I come to EBIT margin, TCS is 24%, Infosys 21.5%, HCL Technology is 18%, Wipro, they have done very well this time, 16.5%. So how do you plan to improve your margins and meet your aspirational margin level of 17%?
Can you hear me?
Yeah.
Hello? Yeah. So we've been in a journey. Over the last 8 quarters, we have continuously improved our operating margins. The last 6 quarters, as you know, has been especially noteworthy given the weaker macroeconomic environment which has impacted our revenues. The operational rigor is visible in our utilization numbers, which are now at a recent high. If you look at what are the levers that we think we can flex as we go forward, I've spoken about this: fixed price productivity, rotation, improving our pyramid, and rationalization of our overheads, especially some of the acquired entities that we have as they get integrated with the Wipro. Some of the G&A synergies can be realized. We are looking to realize them. So these are some levers that we can still flex. For us to deterministically move towards our aspiration number of 17% and beyond, it will definitely need the revenue growth to come back. So that also will be an important lever. Those are the things I wanted to share.
Now, what timeline would you give?
No, we're not giving any timeline, sir, because we don't guide for margins. I think we've shared that we are confident of executing it in a narrow band with an upward bias. And I think that reflects our confidence in our ability to continuously improve our operations.
So we have time for a few more questions. Beena, if you'd like to go ahead, and Rishabh, you can go next.
Yeah, hi, this is Beena from the Economic Times. Srini, if you could just, kind of tell us, what kind of Gen AI projects are you seeing currently out of your current projects, if in percentage terms, if at all you could call out, and if at all, when can you call them out? What is the timeline that you're looking at? And, in terms of hiring as well, you mentioned, 10 to 12,000. Is this going to be through campuses or off campuses? And has the onboarding of the previous offers already been done? I wasn't clear about that answer. So if you could just tell us that. And overall, how do you see while you've answered a little bit on the macros, in terms of your conversations with your clients, are they still being optimistic the way you've been suggesting? And do you see this momentum building up across the quarters?
Can I to take the hiring, then I'll answer the rest.
Yeah, so I think you came a bit late, missed it. That 10 to 12,000 is hiring of freshers, which will have both component of hires from campus and off campus. And we will, in doing this fiscal, we will meet all our commitments of the past offers which we have made. So we'll onboard all the people in the past whom we have made offers during this fiscal. So that's on the hiring. All pending. So what I said, all the pending offers which we have, so a combination of that plus, so we'll conclude everything. We will make sure that no of the pending offers are there. And this was a big commitment we had made, that as we look at hiring, and we have started fresher hiring after 1 year. We didn't do it in the last fiscal. This is the first quarter where we done about 3,000 people. We had made a very explicit commitment that when we start hiring, we will honor our commitments, and we stand by that.
Hi, Beena. You didn't hear my answer to Haripriya, right? I went for the option 2. So, I know Gen AI is fascinating, let me tell you. I'm personally very excited. I was one of the first guys to take the test and passed it, was 20 out of 20 at Wipro. But the fact I'm trying to say is that Gen AI will be infused in our existing business. Gen AI will be, leveraged for software development life cycle, and Gen AI will be powered. Gen AI will power our industry and cross-industry solutions. So there are multiple components that's going on. That's why it's very difficult to predict what it is. For example, the deals, 4 deals I talked to you about today, right? All of them are powered by AI. Now, how do you, calculate that? So I'm not able to give you a time frame in terms of when we will do that, when we will come and publish to you. But that's something that obviously we're thinking internally.
Hello, sir. Samir from ET. To add one question for the Bina.
I'm sorry, I didn't
Samir
answer.
from ET.
Yeah, ET, right?
Yeah.
I didn't answer the Bina second question. Okay, so I was just looking at what it is. So is it okay if I answer that question? Thank you, sir. So on the macro environment, you talked about the optimism, right? The clients that I have met over the last 90 days gives me confidence and comfort of the opportunities we have ahead of us, and Wipro being on the table to help our clients. Okay, and from I talked to you about, I don't want to repeat it, about each of the markets and each of the industries. Like I said, manufacturing and E&U for us is a little bit softer, but once you start winning deals and coming back into these accounts, it should organically start growing.
This is Samir from ET, sir. You spoke about green shoots in Americas and Capco. Can we take like the slippage in active clients are more from APMEA and Europe?
See, I think Aparna did talk about it. We had some large project coming to close, both in manufacturing and energy and utilities. It's a one-time phenomena that we experienced, because of which in Q1 you saw that, right? So it's to me, it's more of a one-time here and now. Now we need to build that gap and keep going forward. That's how I would articulate, Samir.
Rishabh, if you'd like to go ahead.
Hi everybody, Rishabh here from Money Control. I had 2 questions, both for Srini. The company has a stated goal of reducing the tail end of the customer size. So we have seen that the tail end has been reducing. For example, $1 million and $3 million, both have reduced. But we have also seen that the large ones, that is 100 million, 75 million, have also gone down. So would you like to revisit that strategy? And on the second question that I have is, continuing on the question on leadership churn, the past 2 resignations that we have seen, the big leadership exits, are both from the Capgemini, your rivals, stable. So should we, what should we expect on that front, and what's being done? Thank you.
So I'll take the question on the tail account, exit strategy.
Sure.
I think it was very, very localized, especially in the context of something that we were doing in APMEA, more specifically in some parts of India and Middle East. I think that's been executed. What you're seeing as attrition is also a result of the continued softness in discretionary spend environment. And that's perhaps impacting some of our $1 million accounts, right? I think, like Srini has already answered, we are focused on growing our top 100, right? It is an aberration. We've lost, a few in perhaps the greater than $50 million. But if you look at the greater than $20 million, it's flat. So there will be some volatility that could happen within these buckets. But our emphasis on investing in our top client stays, and that should show results. And our top 25, like I said, continues to outperform. It's growing 1.3% sequentially. So that should give you a lot of comfort on our strategy working. On the leadership exit.
So Rishabh, let me rephrase and repeat what I said. As an organization, we are focused on 5 strategic priorities that I called out. Second, the focus is on execution rigor with speed. And third, people and leadership will continue to evolve along with the strategy and execution rigor, period.
We are over time, but we'd like to take one last question from Sonal.
Hello everyone, Sonal Chaudhary this side from Deccan Herald. So like Srini highlighted that America is seeing a better demand. So do you see this demand sustain going ahead, especially now that inflation seems under control and that a rate cut is likely from the Fed? Secondly, your attrition rate has remained almost similar, 14.2% the past 2 quarters, and currently it's 14.1%. Now I know that it's not possible to actually predict what's going to happen next, but is there an outlook on that front? Secondly, what's your outlook on the BFSI for the coming quarters? And are clients resuming large ticket spending? Yeah, that's it.
Okay. Sonal, let me answer the demand. Is it sustained? And BFSI, right? Those are the 2 questions let me answer. On the, you're absolutely right. Inflation, rate card, everything will have an impact on the discretionary spend of our clients. From our vantage point, since we give a guidance for just Q2, like I said, BFSI, I'm very positive for Q2. Second, I also said second half, the general trend is that expectation is irrespective of the election year in the United States of America. The second year is expected to continue to grow. And you don't know what you don't know, but that's what they're saying it. And from our vantage point, we continue to see the deal momentum, and it's reflecting in the deal pipeline. So our job is to go and convert those deals that are in the pipeline. So that's on the demand situation. Specific to BFSI, like I said, the BFSI actually, we are going to see, thanks to, I give the example of Capco, right? Capco is tip of the spear for us when it comes, it's a strategy and consulting led, and Wipro is actually works partners to execute that aspect. So if the tip of the spear continues to grow both in Europe and in Americas, that's positive news for us. So that means there is a discretionary spend that continues because Capco does mostly discretionary spend. So that's the color I can give you.
So on attrition, yeah, it's been more or less flat last few quarters. But I said that we are seeing a slight uptick, which could be in function of demand environment improving. But we are keeping a close watch. We are comfortable right now given the supply side actions which we have taken in anticipation of the same.
We will have to conclude our Q1 FY25 earnings press conference. For all the follow-up questions, we are very happy. Please reach out to the media relations team. And thank you, and we'll see you next quarter.
Thank you. Thank you.
Thank you, everyone.